There we go. That lag was kind of crazy. Did y'all see that? It kind of like glitched down there. We can go ahead and get some dubs in the chat. Let's get them rolling in. So far, I like how we're leaving this open here. We kind of stalled around. We get speed underneath that low, and that fair value gap hasn't been traded to. So now I'm watching, do we trade back up to the first presented? I like to use that as a short, and I have my stop loss above consequent encroachment of this inefficiency because I'm not really expecting that to be traded to. So I want to see if we could trade up to the high. And I'll put consequent encroachment on. Oops. All right, shorting at the low of that first fair value gap. Want to see if we want to make a run for those relative equal lows. And my stop loss is above midpoint of this fair value gap. I want to see that stay open. I went back to Dow. Dow's been moving cleaner compared to the 3 averages lately, which is surprising. That's how you know the market's been done. Yeah, if Dow's moving cleaner than NASDAQ and S&P, yeah, then you know that it's being a little wonky. As far as my stop loss, if we can accelerate underneath this low, then I'll move it to break even or just trail it down. But I want to see us dig through this down close candle. Right now, the opening price to the high, that wick is offering support, which is what I don't want to see. If I'm bullish, I want to see that. But since I'm looking for sell side, I want to see us eat through mean threshold of this down close candle. That'll give me more conviction that we're still likely to go lower. And we're also above the 8:30 and midnight open, so I like this short. That down close candle is the only thing I'm watching. We just traded into a 5-minute bearish fair value gap. On this here. Admittedly, I don't like how much time is spending inside the first fair value gap. I like how the bodies are staying inside of it as of right now. And so far, I like how we're leaving this fair value gap open. We haven't really traded to it. It's just not running to the sell side targets with the speed I like to look for at the moment. But as far as the signatures and price, I like what it's doing for now. So aiming for that low is just taken out. I'm going to reduce some of that risk just by a little bit. I'm not going to move to break even. I'm not going to be too aggressive with it. Small little partial at the midnight opening price if we can get that. So trimming my risk by about 10 handles or so. I wanted us to accelerate underneath this low. So far, we haven't got that. If we were to have accelerated beneath it strong and fast and reach for the sell side here, then I would have moved my stop to break even. But because we didn't get that signature that I like to look for, I can't be too aggressive with it. NASDAQ has to show me that it's done doing the business up here. So that's kind of my thought process when it comes to moving my stop. I want to see NASDAQ pick up speed to the downside, and then I'll move it to break even because I feel like it wouldn't need to come back to that first presented fair value gap. So I'm doing the same thing with this low. Can we accelerate beneath that and make an attempt to reach these relative equal lows down here? If we can do that, then I'll move my stop to break even because I'll believe that our job is finished up here. So do we get speed underneath this low? And do we make an attempt to get sell side down here? If we don't do that, then my stop has to stay where it's at. I did trim it a little bit, so I'm not really worried about it. But we've already spent the last almost 10 minutes or so working that first presented. The bodies are respecting it, especially consequent encroachment here, which is nice. Just waiting to see if he wants to deliver that sell side. It's been one of those weeks. Yeah, this week has definitely been a little bit more fickle. Like, this is my first trade in the last, 2 or 3 days. Haven't taken a trade the past 2 days, rightfully so. It's just been one of those weeks. But it's January. Didn't really have high hopes for January. It's the first trading month of the year. So market's still kind of cooking up, accumulating. But February and March, hopefully I'm expecting cleaner price action. So I hate blaming stuff on price action. Yeah, me too. I hate doing the blame game. Like, oh, this week this price action has been trash. Like, my thought process is more, if the price action is trash, you just have to get better at reading price. But it really has been one of those weeks where the 10 o'clock to 11 o'clock hour just has not been moving. Like, it's, you know what I mean? So we're taking out that low. Again, I'm not in a hurry to move my stop. I want to see if we can get a strong close beneath that. And I'm really looking at this low here. If we can make an attempt to get down there, then I'll take off my risk. And I'll take a small partial at the midnight open because that is the rules of Tremaine's model. If you're trading that midnight opening price is always a profit objective. I'll just market that in. Whoops, oh, I missed it. Whoops, I was too busy playing with my stop. Well, that should be a partial. That should be a partial. I was playing around. This is paper anyway. This is for educational purposes. So, but on my live account, I would look to take a partial there if I wasn't distracted. But that is a take profit level hit. If we tap it again, then I'll try to take another partial there. No, this is paper. I'm done on my live account. We won't be touching my live account until next week. Monday is one of those free tape reading streams on YouTube, so I won't be trading Monday. But Tuesday, I'll be back trading my live account. I'm watching this Cibi in here. I'm just going to go ahead and take my partial here. It's supposed to be at the midnight open, but I was playing with my stop loss and I missed it. So theoretically, just to bank something, I'll close half here. But to make up for that small little loss in price, if we do trade down to the midnight open again, I just won't take a partial there and I'll just hold for the sell side. But that theoretically should be your exit. And you can see why you should take partials at those levels, bouncing off of it. And then we did tag the sell side. Even though we did sweep beneath this low, I'm not really convinced by that. If I'm being honest, it's a little too shallow. I'm just seeing that as we form like a triple bottom. So I'm not convinced that we're done going lower. And I think I want to do something. In case NASDAQ gets really excited. Stop is at break even. It looks like I don't have a stop loss on, but it's hiding behind my entry. Tapping that 830 price level. That's a short-term premium, and we've also touched the bottom of that new day opening gap. See if we can work lower from here. Like I said, my thought process is we've already spent about 10 minutes or so working that first presented fair value gap, so I don't feel that there's a need for us to return back to that. So besides the first presented fair value gap, where else can we work lower from? Well, we have our new week opening gap or new day opening gap, can't remember which. And then we have that 830 opening price, which we know is a short-term premium. So I like how so far we're not interested in returning back up here because we've already spent time. We've already done the business like we talked about earlier up here. which is why I'm comfortable moving my stop loss now instead of moving my stop loss when we had this wick here, snapped back up. Once we get this movement lower, now I'm comfortable moving my stop to break even because we've done our job. Come back up. We're not interested in touching that anymore. So I like the feedback we're getting here. Small partial will come off at that new day opening gap, I believe this is, if we can touch it. Look at the bodies respecting that midnight opening price. I love seeing stuff like that. The midnight opening price is so powerful. So powerful. Now I'm watching these two consecutive up close candles as one bearish order block. I want to see if we can stay beneath the midpoint of that. So let's take this fair value gap off for a second. If you take the low of this candle up to the high of this candle, here's mean threshold. And if we're bearish, I want to see if we can stay beneath that. We can wick and touch it, but as far as a closure above that price level, I don't want to see that. You can't take partials on NAS indices. You should be able to. Indices like NAS 100 is easier to take partials on that because you can split up like your lot size a lot easier. You are watching a master at work. I should have put that in the intro. I like that little sound bite. What is that blue fair value gap? This is the blue fair value gap we're watching to see if we wanted to trade up, because originally we're looking for buy side here on the daily chart. So I was looking at that buy side imbalance, sell side inefficiency, see if they wanted to take us higher. Price was stalling around quite a bit, and it ended up being used as an inversion fair value gap, and then breaks lower, and then that's when we go short. Yeah, I like country music. Rachel doesn't like country music, but I do. Country music's a vibe. I'm not like full blown like a country enthusiast, but I can enjoy me some good country for sure. Absolutely. Midnight opening price, sending price higher. You can see why that's such a powerful level. And the midnight opening price, it just gives you so much insight. I could have done better with not being as distracted. Right when price touched the midnight open, I wasn't paying attention. That's just a mental error, but regardless, as far as teaching purposes, you can see why it's so important to take a partial there. That's why Tremaine's model, I kind of incorporated that, because that's a key reversal point. Despite the fact that we have clean sell side down here, the midnight opening price is really kind of holding it. And if we do touch it, I'll take one small micro off kind of run down my equity. So we just tagged it a little bit. I'll go ahead and adjust this. So 2, 3, and then I have one more contract on. Best case scenario if it really wants to get excited. But because that midnight opening price is showing signs of support and price is really having kind of a hard time getting through that, scaling out some of my equity. But now that majority of my position is off, we were originally short 10 contracts. Now we're only short 4. So we've taken off more than half of our position. I'm not going to take any more partials off other than the new day opening gap and the sell side should we want to trade there. And then obviously we have that runner way down lower if we want that. I'll probably use like standard deviation projections for my last remaining contract if we want to get down there. So let's go ahead and, well, we'll just worry about that later. Let's see if our partials get hit first. Yep, good catch, Reba. We are in a 5-minute breaker. As far as your 1-minute chart, your breaker would be your high, low, higher high on the 1-minute chart. These 2 down close candles is your breaker. So visually, we're not going to keep this on because we don't want our charts messy, but if you take that entire range, this is your breaker. And if we lose that, then that'll be kind of questionable in shorts, and I wouldn't be interested in being in shorts anymore. And I do like how my stop loss is above that. Want to see if we can pick up the speed here. Once we get close to 10:30, we always get a nice little volatility push. Really like a couple minute, like right where we're trading at now, around 10:28 to like 10:32. Just that a couple minutes before and after 10:30, usually get some speed. Obviously, I want that speed to be lower, but just kind of looking at the clock, this is when it tends to get a nice little push. Just like that. I'm only interested in trailing my stop loss down once we tag that new day opening gap. If we touch that, then I'll trail it just a little bit, not too aggressive. And this should actually be flipped. Like doing it that way. So trading on this candle here, open, trading above the midnight open. We have this up close candle. I want to see that act as a bearish order block and take us lower. Okay, anything above that midnight opening price is a short-term premium. And I'm watching this up close candle here. This is our 10:30 candle. There's the speed at 10:30. Obviously, I wanted that displacement to be lower. But again, another good teaching point. You can always expect a little bit of volatility around that sweet spot, that kind of 4 or 5 minute window. We're trading inside of a SIBI. If you look left, you have an imbalance here. Anything really higher than that is questionable because, again, we've already talked about the business being done up here. So anything higher than this inefficiency, really anything higher than our new day opening gap that was used as resistance here, I wouldn't want to see much higher than that because, like I said, if we want to revisit that first presented fair value gap, then we're just likely to get back above it, use it as support, and then possibly run out the buy side. So from where we're trading at now to this new day opening gap, I want to see if NASDAQ gets weak. That's why trading micros is so much better than just trading like one mini contract, because you could just take partials and scale out. You don't require your best case scenario target to be hit. And it's a lot easier sitting through this consolidation, sitting through this, retracement and all that, because you've already taken off half of your position. So, and it makes it easier to leave runners for longer targets because you already banked something. If you're just trading one mini contract, then it's like, let's say you're aiming for a sell side down here and you only have one contract on, entry here, looking to get out here, and you still haven't made anything. You're still holding on to this, and it can be a little bit more stressful. So partials are definitely a lifesaver. Micros are a lifesaver. So we have this fair value gap. I want to see that be used as an inversion level. Should we trade down into it? Right now it's staying open, which is not what I want to see because that is a bullish signature if we leave this fair value gap open. So for one, I want to see us trade down into it, but also I want to see us disrespect midpoint, get beneath it, use it as resistance, and then obviously we have our limit orders resting not too far away. Now, when would I expect, a retracement higher to possibly run against buy side? Me personally, I wouldn't be expecting that move until about 1050. Okay, that London close macro, 1050 to 1110. That's when I'll be okay seeing, a full reversal higher, clearing out the buy side, and maybe trading up here. But because we're not in that time window just yet, I'm still curious to see if we want to reach these levels down here. But as of right now, this candle open, traded down into this fair value gap just by a few ticks, leaving majority of that open. That is a bullish signature that I don't like. On a 15-minute chart, we have a SIBI formed around 9 o'clock and may be interested in trading up into that. But we do also have a fair value gap. I'm not going to go to it here because I'm watching the 1 minute, but on the 15-minute chart, your 9 a.m. candle, that's a buy side imbalance, sell side inefficiency. It's a bullish fair value gap. Nah, what the heck? This imbalance here. We open, traded up, tapped the low of it, so that's something that I'm watching. So we're inside of this fair value gap. But as of right now, I don't want to see that be used as support. At least not until the London close macro at around 1050. Draw this forward a little bit. So even in this trade, while it's still panned out in our favor, the consolidations is kind of just matching the theme of what we've seen for the past couple of days. As far as it's just muddy. It's muddy. Even though it was a win, I'm not feeling some type of way that I didn't take it on my live account, because it's not the cleanest. I've seen cleaner markets. I've seen cleaner wins. So I'm not feeling any type of way that I didn't take this on a real account, because it's still kind of muddy in here. All right, so we're trading up to that new day opening gap and that 830 opening price. Again, I don't see a need, if we're bearish, I don't see a need to return back to that first presented fair value gap. So that's kind of like the last line of defense for lower prices, in my opinion, and we just traded into it, and I like the reaction we're getting. I don't want to see us return back to that first presented fair value gap anymore. So a lot of people ask, how do you use the first presented fair value gap? You need narrative first. Some people may be looking at that, wanting to go short. I'm not looking at that. So we're in that SIBI. I mean, not that SIBI. We're in that bullish fair value gap. I like how we're approaching midpoint. So far, we're disrespecting it. This candle open, trades up, touches the high of it, using it as resistance. I like that. We want to see this be treated as an inversion fair value gap. I don't want to see that be used as support, because we're not in the time window yet. 1050 to 1110. We're not in that time window when you can reasonably expect excuse me, where you can reasonably expect a retracement higher. Now, once we get to 1050, 1110, then I'll be watching to see if discount PD arrays wants to send price higher. But until then, I'm sticking with my short bias. There we go. That lag was kind of crazy. Did y'all see that? It kind of like glitched down there. Very nice. We can go ahead and get some dubs in the chat. It's been a while since we spammed W's. Let's get them rolling in. That's a nice trade. Kind of nasty to sit through, but let's get those W's rolling in. Starting the year off right. Sell side, still in the crosshairs. I only have 2 micros on. It's 80% of the positions already scaled out. And up dubs. Good dubs. Not the prettiest dub. It's not the cleanest, but what they say, a win is a win. Big dubs. All right, so we're in that fair value gap. Remember, I don't want to see this be used as support. We touched up trading it. I want to see if this can send us lower, because I never wanted to see that act as support anyway. So I want to see this act as an inversion level. And then we also have a regular SIBI bearish fair value gap here. So we have 2 factors here that I like to see take us lower. And then the sell side, we've already cleaned out a lot of sell side. This is kind of like the best case scenario. So This is what I would like to see. I like the bodies right there. That is perfect. Absolutely perfect. That's what you want to see. See you, Tim. Have a good one. See you in the next stream. Stop loss is staying where it's at. Again, I'm not even worried about it. Probably not going to trail it until we get that last limit order, and we still have that one all the way down here. But until we tag that sell side, if we tag that sell side, then I'll possibly trail my stop down, but we've banked a lot, so. So now I'm looking at the clock, and we're getting closer to that 1050 mark, and that usually brings a retracement or just a full-blown reversal. So my thought process right now is, if we know that 1050 to 1110 macro usually brings a retracement, I prefer that sell side target to get hit before 1050, which is the next 7 1-minute candlesticks. If we don't get that, then I'll start scaling out, meaning, let's say like we're trading up here and it's 1050, then I'll probably take a contract off, bank a little more, and then just leave the last contract on for the sell side. But because we know that the London close macro can kind of reverse price, I got to keep my eye on that. Thank you, Jose. Amen. Appreciate you tuning in. See you next week. It's a good way to go into the weekend after not taking a trade the past 2 days. See you in the webinar. Remember, we have our webinar on Sunday. It's going to be a good one, so make sure to tune in live if you can. Obviously, it's going to be recorded if you can't make it, but if you want to ask questions and get your questions answered, that webinar on Sundays, it's going to be good. Um, 10 a.m. The webinar is at 10 a.m. New York time. And then you can also check the monthly schedule. The monthly schedule calendar channel here in the Discord. It has all the times, which days are webinars, which days are the live back testing, which days I won't be trading and live streaming. Just take a quick glance on that. Trading back up to that inversion fair value gap. Again, expecting this to be used as resistance. We did not want to see it be used as support here. Now, if we get to 1050, 1110, and we're trading above it, then at that point in time, I would reasonably expect that fair value gap to be used as support, because we're in that time window when you can see a retracement going higher. But we still got 5 minutes left, so I'm not really entertaining that idea just yet. Nah, no preview. No preview. You just gotta tune in. Edward, love it. Love to hear it, Edward. I appreciate it. That's awesome. I love to hear that. That's good stuff. I'm glad you're enjoying the community. And that's awesome. Love to hear it, bro. Awesome, awesome, awesome. That's amazing. This is my second week of trading. It's been a very tricky week. Do you have offer monthly extensions? No, no extensions. If the month is trash, if the weeks are trash, I mean, it is what it is. You know, it's part of trading. If we have sessions like the past 2 days where the price just isn't doing anything, then it's, you know, that's the industry we signed up for. So, you know, we engage when we can. If there's a setup that's there and if it makes sense, then we'll take it. But if nothing in a chart is, you know, clean, then you know, I'm not going to force a trade just because, especially not on my live account. We just exercise discipline. That's a nice exit. I have my limit order placed at the high of the new day opening gap, but it like gapped down, kind of glitched, and it got me out pretty much at the low. So that's pretty cool. This is the positive slippage that I like to see, not that shenanigans that Nasdaq pulled on Tuesday, I think it was, when the slippage got me out like minus 60 handles. This is the slippage that I like. See you, George. Have a good weekend. All right. So it's 10:48. London closed macros pretty much here. And you can see we're trading above that fair value gap that I wanted to see used as an inversion level. Now at this point in time, I'm accepting the fact that Nasdaq may not want that sell side at the moment. It could still run down there, obviously, but we're in that time window where when you could see a retracement, and obviously you're seeing a short little retracement now. But stop loss isn't going to get moved or nothing like that. It's insignificant at this point. It's a nice trade. A little over at 2-to-1 risk to reward so far. It's not bad. I like the bodies here. Inversion fair value gap is respecting that. That's really nice. This short was your tier 2 short as far as Tremaine's model. Okay, your best shorting opportunities is above that midnight opening price. If you're above that midnight open and that 8:30 open, any shorting opportunities above both of those opening prices is a really rich premium. Okay, you can see the reaction off the new day opening gap, but it's also trading above that 8:30 open. Why is it trading above that opening price? Because that is a short-term premium. Okay, your best shorts are above that price level. We tap it there. Let's take off this new day opening gap for a second. Okay, tapping it there. Look at the bodies. Okay, the opening price on 8:30 is 17.75. The opening price on this candle, 17.5. So trades just one tick above that 8:30 open, or just one tick short. Candle here, and you can see the bodies. So best shorting opportunities, I use the opening prices to kind of gauge that. We talked about this fair value gap. We want to see that stay open. Don't want to see that traded to. Nice. For the mentorship group, you're seeing the signatures. Okay, for those who are watching, if you're in the mentorship group 1, you're seeing the signatures as far as bearish price action and low resistance markets. Okay, speed underneath lows, fair value gap staying open. Admittedly, we're marking time inside of inefficiencies, which we talked about. Marking time inside of inefficiencies, okay, that's not something you want to see. But as far as entry-wise and the criteria that I was looking for in order to feel confident in lower prices, you're seeing those signatures here. And then for those who have watched the video on daily bias, compare today's trade. When we talk about daily bias and there's a lecture coming out on Sunday, it's the same thing. Okay, the same signatures that we see here, you apply that to the daily chart, and then we'll cover top-down analysis and all that in the next lecture video. But this same little fractal price action, you're going to add that to the daily chart, and that'll help you with top-down analysis. Okay, so if you see this, let's say this is a daily chart. If you see this displacement on a daily chart and we get that speed we look for, okay, and we get a fair value gap on the daily chart, what should your bias be? You should be looking for lower prices, and the narrative is we want to see majority of this stay open. So if we have that insight, and let's just pretend this is a daily chart, if you're doing your top-down analysis, what are you expecting on an hourly chart? Okay, on an hourly chart, do we want to see price trade up here? Nope. So any PD arrays on an hourly chart that are resting in the lower half of this bearish fair value gap here, you would expect that to take you lower because the narrative is focused on the daily chart. You wouldn't want to see the upper half of this traded to. And then that's how you find your setups intraday. But there's going to be a lecture video on that this weekend, and we'll talk about that in the lecture and in the one-on-one sessions. So this is a good live example of that. That's what's up. Who is Soggy Waffles? Is that Jordan? Is that Jordan? I think it's Jordan. Is that you, bro? Cause I remember we had a one-on-one session and you were talking about, you showed me a trade. Yeah, okay, that's what's up. I'm starting to remember your names and usernames. But yeah, it's being used there. Whose meeting do I have today? Are we meeting today? Oh no. Oh, we already met this week on Wednesday. Okay, cool. I'll just stay on. I'll stay on stream. If we tag the sell side here, then depending on the speed at which it does it and whatnot, we may just cut the stream because I'm leaving a runner on for like something crazy in case NASDAQ just really falls out of bed, maybe like this round number, 21,900 or whatnot. But if we just stall around too long, then we may just end the stream. Or if we tag the sell side, we may just end it there, and then I'll let everybody know where I'm leaving my runner, and then we'll just wrap up this stream because I do have to get it edited, and then I have a one-on-one session at 1 o'clock, so I want to prepare for that. Shorted the breaker 958, 958. This down close candle. Which one? Oh, your entry was 958. Nice. Nice. You got a real good, that's a real premium entry right there. Once NASDAQ showed an unwillingness to reach the buy side up here, and once we started disrespecting this fair value gap and closing beneath it, and we're getting speed underneath lows, It was just telling us that we're not interested in going higher, but originally we were looking for that, but NASDAQ had other plans and we were able to capitalize on that. But that's a nice short, bro. 949.25 TGIF. Let's look at it. TGIF. I really don't use TGIF that often. I'll be forgetting about it, to be honest. I have a preset fib. Let's take this off for a second. TGIF. Okay, that's where I'm leaving my take profit, or my last runner, 20% retracement of the weekly candle. That's kind of like the best case scenario exit. Thank you, Reba, for pointing that out. So let's go ahead and put all the lipstick back on there. We're working the heck out of this fair value gap. Even though we're in this trade, the price action is so nasty in here. Like, I mean, it's really nasty. Smallest opening range gap. I don't even think we looked at our opening range gap this morning. Oh, yeah. It's not too bad. If we don't get the targets hit by like 11:30, then we're just going to get off of here. I'm not even trying to play with it. It's just taking too long. How do you take partials on Top Step? I have no idea. Maybe somebody else can help you with that one. Do you think we'll get better price action next week? This week was mentally draining. I hope so. Let me look at the economic calendar for next week, see what it's looking like. 27th through the 31st. So next week we have FOMC. We have nice high impact news drivers on Thursday and Friday. I think next week could be nice. I'm expecting the second half of next week to be nice. The second half. So after 2 p.m. on Wednesday, because that's the big FOMC. It's not the FOMC. What is it? It's not like the meeting minutes. It's the actual funds rate. So Monday and Tuesday, I'm thinking can be a little bit wonky next week. But once we have the funds rate FOMC thing on Wednesday at 2 p.m., after that, then I'm expecting clean price action on Thursday and Friday. So that's kind of my outlook so far for next week. PM session after 2 p.m. on Wednesday, I'm expecting the cleanest moves. Monday and Tuesday, I think it's going to be hit or miss, which is why we're doing a free public stream on Monday on YouTube. I won't even be trading that day, and we'll see what we get on Tuesday. Tuesday has a high impact news driver at 10, so that should be nice. But really waiting until after Wednesday afternoon for clean action. So that'll be another nice partial, the touch of that new day opening gap, because it's 11 o'clock. We're in London close. Okay, a retracement higher is likely. So that's a nice way to run down some of your equity. But we've already taken out 8 of our 10 contracts, so I'm not interested in taking any more off. We've already done a good job taking partials. I look for TGIF each week. I like the concept of TGIF. It just slips my mind. Like, I'll just be caught up in the price action and I'll forget what the weekly chart is doing. Or I'll just forget that it's a classic thing that happens on a Friday. I see when I've been locked in on the webinars. Awesome. Prometheus, that's awesome, bro. I feel like I haven't seen you in a while. I usually see your name in the chat room pretty frequent, but that's what's up. Keep up the good work, bro. Keep up the good work. That's awesome. What's the best TGIF video? I think the best TGIF video is just the ICT one, the original one. It's a fairly simple concept as far as you're just looking for a 20% to 30% retracement on the weekly chart on a Friday. Thank God it's Friday, so that's really all it is. So the weekly chart, we've traded all the way up here, and then the 20% retracement is here, and then that's a common occurrence, especially if you have like a large expansion week on Thursday or Friday. You can expect us to kind of come off that high and retrace, and you can capitalize on that. Inversion fair value gap being used as resistance, absolutely perfect. The body's here. It's nasty, don't get me wrong, it's real muddy and nasty in here, but it's being used as resistance, struggling to get above it, which is what we like. I think this is the longest trade I've held. We're breaking records today. I don't think I've ever sat in a trade this long. There we go. And now we have 9 contracts scaled out. Very nice. And we'll see how it reacts after taking out that low. If it plays around and starts doing this again, this consolidation, then we're just going to cut the stream and I'll just leave it running. But if it looks like it still wants to stay heavy and work lower, then we'll stay on stream. But I do want to get this edited and uploaded before my meeting at 1, so I got about 2 hours. But this is a long video. This is going to take at least an hour just to render and get posted. TGIF fib settings. It's just, you have the 0 and the 1 that marks the high and low of the weekly candle, and 0.2 is your 20%, 0.3 is your 30%. So if you're, like for instance, you have a weekly candle that expanded this much, then you can run your fib on that from the low of the weekly candle to the high of the weekly candle, and then Thursday afternoon all the way to Friday's close, you can expect price to come off its weekly high and trade down to the 20 or 30% retracement. That's what that is. Recently I watched a video about the ICT bullet. The guys hopped in on the first 5 minute reaction. price hopped down the first 5-minute fair value gap. Yeah, it's fractal. You can use, as far as the silver bullet, it could be on a 5-minute chart, 4-minute chart, 3-minute chart. As far as like the first fair value gap after 9:30, it's the same thing. It could be on a 2-minute chart, 3-minute chart, wherever that first fair value gap forms. You know, on that time frame you're looking at, you can use that for the same opportunity. It's a really nice exit. What's the low on this candle? 970, getting out 3 ticks before the low. That's nice. But I'll come back to the charts when these alerts get activated, and then I'll end the recording and get this uploaded. But be safe, love y'all, and I'll see you all, if you're still watching, whenever this trade hits. And I think that's it. Have a blessed weekend. I'm gonna mute myself now. I'm headed out to the kitchen to do other stuff. Peace. All right, to the last 46 of you watching, I'm gonna go ahead and cut the trade here. I got the bacon on the stove, and I'm gonna wrap it up. It doesn't really matter if it hits the profit target or not, but I'm gonna go ahead and close this manually. There we go. And it was a great week. Appreciate y'all tuning in, man. It's been not the cleanest week, but we're ending on a high note, so can't complain. I'll see you all in the webinar this Sunday at 10 a.m. Be safe. See you next week. Peace.